Welcome to another S&P 500 analysis. We saw some crazy price action during the week when we saw the NVDA earning report and a rosy forecast from the company. Then we also heard a hawkish speech from J Powell at the Jackson Hole, and we saw the market sold off. And as soon as it finished, the market just went back up. So what give? Well, in this week's video, we're going to take a look at the price action, the market internals, the market sentiment, oil, the US dollar, the 10-year yield, silver, gold, and also the 11th sector in the S&P 500, and also the ETF for the indexes, and see if there's some kind of sense that we can make out of these crazy price action from the week just past. Stay tuned. Let's take a look at the indexes and see what they did this week. Over here on this table, we see the NASDAQ was the top performer. The NASDAQ composite gained a little bit over 2.25%, while the NASDAQ 100 almost 1.75%. The S&P 500 0.8%, and the New York Stock Exchange Index 0.11%. The Russell 2000, the Dow Jones Industrial, and the Transportation, they all lost ground for the week. So with the Dow Jones Transportation ended up to be the worst performer, it lost just a little bit over 0.5%. And looking at the weekly chart of the S&P 500, we notice that the range is still up there over 100 points. It's sitting at 102 for the week. But after all the hoopla and the highly anticipated NVDA report and also the Jackson Hole, J Powell speech, we end up the week up 36 points, only 0.82% for the S&P 500. Now, granted, we did see a lot of volatility, and that is good if you're intraday trading. So definitely the day trader had a ball with the volatility this week. Now, the S&P 500 still closed down below the 10-week moving average, but it's still above the 40-week moving average, and it closed with an inside bar and broke the 3 consecutive down weeks. So this week ended up, like I said earlier, 36 points. Now let's take a look at the sentiment. You see that the VIX is still below this 20 and 30 zone, and it has actually came down a little bit from a couple of days ago. It is sitting at 15.68, so the market participants are still very complacent. But the put call ratio is still sitting inside of this 0.7 and 1 zone here, what we call the hedge zone. So the market participant are buying a little bit more put than call. So there is a little bit of a caution there. And so the although the market participant are feeling a little bit complacent, but they are not all risk on. And looking at the up-down volume ratio, it just basically is a chart fest for the week, right? One day up, one day down. That kind of stuff. But we did see a couple of block market participation day. Notice that on the 23rd, which is the Wednesday, we did see a block market participation on the upside. But then on Thursday, we also saw block market participation on the downside based on the daily advanced decline. And for the new 52-week high versus 52-week low, we are still looking at more stock making 52-week low than stock making 52-week high. So that is not good, because notice on this chart here, the number of stock making 52-week high is coming down, while the number of stock making new 52-week low is kind of coming up a little bit, but at least it's not going down as much as the 52-week highs. And looking at the cumulative AD line for the New York Stock Exchange, we see it is kind of stable here versus the S&P 500. We are not seeing any sort of a divergence in terms of positive or negative. And for the NASDAQ market, we did see a little bit more on the sell side on Thursday. And we noticed that similarly to the New York Stock Exchange, there were block market advanced participation on Wednesday and block market decline on Thursday. And for the NASDAQ market, we are seeing much more stock making new 52-week low than 52-week high. We see 209 on Friday making 52-week low, and only 34 stock making 52-week high. So you see that the number of stock that are making 52-week high is relatively small compared to the stock that are making new 52-week low. And looking at the cumulative AD line for the NASDAQ, notice that just on a short-term basis, we just noticed we just saw a negative divergence develop between the AD line and the NASDAQ 100, in addition to this long-term negative divergence that we are still waiting for the NASDAQ 100 to resolve this discrepancy here. So that is not a good sign for the NASDAQ market. Now let's take a look at the relative strength for the S&P 500 11 sector versus the S&P 500. As you can see, last week, the XLK, the technology sector, was the top performer with the consumer discretionary in second. The worst performer was energy. It lost a little bit over 1.3%. So looking at the XLK, you see the relative strength. It is outperforming the S&P 500 a little bit because it is on a little bit of an upslope here in terms of the relative strength versus the S&P 500. And here the consumer discretionary. Now the consumer discretionary is underperforming relative to the S&P 500 because we are seeing a little bit of a slope downward here on this relative strength curve here. And the real estate market is the real estate sector is a little bit flat, although it's not going down and neither is it going up. And here's the communication, a little bit of a mixed bag. It did come down a little bit, but it is stabilizing here. So we'll see, will it get a bounce or will it continue to move downward in the coming week? And here on the industrial was also coming down a little bit. So it is a little bit underperformed the S&P 500 in the last couple of weeks. And here's the utility. Utility is pretty much flat, so it's not underperformer or outperforming the S&P 500. And the financial, you can see financial is a little bit underperformed the S&P 500. You can see it is sloping down a little bit. And here the material sector is also a little bit underperformed the S&P 500. Healthcare is still forming along with the S&P 500. So we did see earlier it came up, and right now it kind of a little bit of a flattish. And consumer stable came down a little bit in the last week or so, but it is still near these low here. So I wouldn't say it is underperformed or outperforming the S&P 500. It's pretty much stable. And here, energy has been outperforming the S&P 500 and took a little pause earlier in the week, but right now it's holding stable up here. So I would anticipate the energy sector will continue to move up and outperform the S&P 500. Let's take a look at the 10-year yield. For this week, we saw the 10-year yield actually went above this 4.33 level. Remember, we were talking about looking forward to come up to this pivot high. And I'm still looking for this to come up to 4.5% to 5% eventually before we see it might be before we see it topping out here. Although it did pull back a little bit and came down to this 4.25% here on Friday, but I still continue to watch for the yield to move higher. And here we are looking at the dollar index. We see the dollar came up and got above this 103.80 here. And right now it's sitting at 104.18. Still looking for this thing to come up to possibly to this 105.80 area. Basically, these areas here come up and check these resistance levels. And here for the dollar future, remember we were talking about this composite point of control to come up to this level here. And right now it's above this level. So I'm anticipating to see it possibly maybe chop around a little bit here and then move up to this 105.84, this little bit of a low volume zone here, and also these pivot high. So basically we're going to be testing this zone pretty soon at this 105.80 area. And looking at crude oil, remember we were talking about crude oil maybe possibly come down and check this composite point of control before make another move back up. I'm still looking for this thing to come up and take out this 83.40 area and then move up here to possibly up at this 90 level in the near term. Although, yeah, we might see a little bit of a weekly bull flag here, could be setting up. So I'm looking for this thing to continue to push higher in the coming week. And for the silver, we saw silver got a nice bounce off of this trend line, also this 22 3/4 level. See that it came back up to this 24 1/4. this composite point of control. So watch for silver to get above this composite point of control and start making another move up toward this 2670 area here, up at this pivot high level. Now we see gold came down, filled this gap, and it got a nice bounce off of this gap level here. Right now it's coming back up to this 1950 level. So if it could get above this 1950 level next week, I'd be watching it to come back up toward this 1970 area and start making its way back up to this composite point of control near the 2019, 2020 level area. Before I continue, let me take a moment and tell you about my newsletter at Substack, The Pulse of the Market. In this newsletter, you could find a daily trade plan that I put out for the SPY and also the E-mini S&P 500. And in that trade plan, every day that I put out on the daily basis, I review what have transpired and how some of those levels have played out or did not play out in the summary. Then we go and move on to the coming day, the next trading session, to see what are some of the level and also some of the scenario that we'll be watching for. So we have a level to watch for potential trade location, and then we have various level as potential target for the upside and the downside. In addition to the daily trade plan, I also published the analysis, a weekly analysis on the FANG stock. And in the weekly analysis, I give a summary of how it performed based on the previous week, that we just finished, and then also the upper and the lower range of the coming week expected move. And then we'll take a look at the potential price scenario, price action scenario, and what are some of the key level to watch for. So if you are interested in additional content from me, go and check out my Substack page. The newsletter's name is The Pulse of the Market, and go check that out. And right now it's totally free, and be sure to subscribe if you find it interesting. And I have the link in the description below, so go and click on that link and come to this page here and just browse around. Now let's take a look at the indexes, starting with the S&P 500. See, the S&P 500 sort of try to get a bounce here, but right now we're still looking at this potential resistance. Right, so we're probably watching the S&P 500 continue to move down to this 43.25 and toward this trend line here, somewhere around 4,200 level. Now, also the other thing is, I don't believe we are in a new bear market, because right now, even though if the price come down to this trend line here, we're only talking about maybe somewhere around 9%. So that's a little bit less than a correction. We consider a correction to be somewhere around 10%. So we'll see, right? Well, just wait until the price come down and see how low it will get. Even if we take a look at this level here, let's say we measure from here down to this 4,100, we're talking about maybe possibly a 11% pullback, right? So again, we just have to see, we're still looking at this trend line here. It is still making a, in a big time frame here, in a relative sense, a higher low and a higher high. For the NASDAQ 100, we're looking for the NASDAQ 100 to possibly come down to this 14,400 area, and maybe even come down to this 14,245 in the near term. And if we measure from the peak down to this 14,200 area, we're talking about just a little bit over 10%, maybe 11% pullback here. So for the trend line down here, 14,400, slightly less than 10%. So we'll be watching for the NASDAQ 100, see would it continue to pull back down to this 14,200 area. And if it push up, then we'll see would it be able to get above this 15,265, because we're still looking at this possible resistance here, this trend line for potential resistance. And looking at the Russell 2000, we're still looking for it to come down to this area here, this 1780 area, and possibly fill this gap down here, 1760 here. So if it could push up, then we'll be watching this 1906. But I'm looking for this to continue to come down. The first level of potential bounce is somewhere around 1820 here. Then once we dip below this 1820, we'll be watching the Russell 2000 to come down here at 1780 to fill this gap. And for the Dow Jones Transportation, the Dow Jones Transportation is still above this neckline here. Remember, we were talking about this potential inverted head and shoulder here, right? This right here, and here's the neckline, and then we basically got a breakout of that. Right now, it could be coming down here to backtest this neckline here at 15,320. So we'll see, is that going to happen, or it's just going to come down and start pushing back down toward this 13,460. And here's the Dow Jones Industrial. We're basically looking for the Dow Jones Industrial to continue to push back down here toward this 33,200 area and possibly come down and fill this gap. So if we get a bounce and look for this 35,000 level here, could be potential resistance. And for the New York Stock Exchange Composite, again, just kind of reminder, looking at this inverted head and shoulder pattern here with this neckline, it broke under it. So right now it's basically retracing back. So we'll be watching the New York Stock Exchange Composite to see would it be able to hold above this 15,400 area. And if it doesn't, then be looking for it to come down and dip into this gap area here and fill this gap below 15,170. Now let's take a look at the ETF for the indexes, starting with the diamond, the ETF for the Dow Jones Industrial. For the coming week, the upper range is between 348.80 and 347.80, and the lower range is between 339.20 and 338. So for the coming week, we'll be watching this 345.14 level, essentially this ledge here, to see would it be able to get above this ledge, and if it could, then look for the upper range to be in play, and also this level here, this level at 349.34. Now, if it's unable to get up above this 345, then look for a move back down and see would it be able to find support at 340.62. If it is unable to find support at 340.62, then look for the lower range to be in play, and then possibly if it breaks below the lower range, then we'll be looking at this composite point of control near 335.14. Now here for the SPY, the ETF for the SP 500. And if you're interested in a more detailed analysis on a day-to-day basis, be sure to check out my Substack page on my trade plan, my daily trade plan, which I go into more detail on the various level. But on a weekly basis here right now, we're basically looking at the upper range somewhere around between 447.80 and 446.40, and the lower range between 433.50 and 432. So for the coming week, we'll be watching to see would it be able to, come up to this upper edge of this balance area and get above this 444 and possibly get above into this zone here. Then we'll be watching for the upper range of the expected move to be in play. Now, if it is unable to get above this zone here and start pulling back, then we'll be looking for the lower range of the expected move to be in play, and also this 431.87 will be a level to watch. If it breaks below this level and enter into this level here, this 420.24, then we are looking at a new zone here. This balance area would be in play, and we could be looking at the possibility of 425 in the near term. So once again, if you want to get a little bit more detailed analysis from me on this, go check out my Substack page, the daily trade plan section. And here's the QQQ for the coming week. The QQQ upper range of the expected move is between 373.50 and 373.70, and the lower range is 356.40 and 354.50. So here what we're going to be watching, if it comes down to this 357.48, right, this level here, this low volume no, if it breaks below that, then we'll be looking at this lower range to be in play and possibly come down to this 347, this ledge here. So we're basically looking at this lower boundary of this balance area that we're watching. So if it unable to hold this 357.48, then that's basically what we'll be keying off of to see what it come down to this 347.11. Now, if it is able to hold this 357.48, then look for a possible bounce, come up to this upper range of the expected move, and even come up to this 375.56 this ledge here, this high volume area. And finally, for the IWM, the ETF for the Russell 2000, we see the upper range is between 188.50 and 187.70, and the lower range is between 180.70 and 179.30. So again, we're looking at this level here, this 183.14. So this is the pivot level that we'll be watching to see will it be able to stay above. If it stay above, then look for the upper range to be in play. If it's below, then look for the lower range to be in play. Simple as that for the IWM. Hope you find this video to be informative and useful, and be sure to smash the thumbs up to give it a like and help promote this video on YouTube. And if you have not subscribed to my channel, click on the subscribe. Thank you for watching and stay safe.